Hello, in today's video we're just going to take a quick look at today's SPX session for the SPX CBOE index. This is for Tuesday, June 9th, 2026. A very volatile session today, but using the SPX Daily Key Levels V3.0 indicator as well as our day trading GPS ribbon indicator with the optional filter for US indexes, able to catch several sharp moves here. Starting off with the close above the bull bear key price level on the opening 9:30 a.m. candle here, as we can see here. A couple of candles later, we have a nice continuation close above the bull bear key price level with the upper bands of the ribbon indicator starting to pull away from the base of the ribbon, and then we get a nice move all the way up to R2 for a nice two-level ideal minimum move for a regular trade. Then we got a sharp reversal after that, closing below YDH, PMH, and then finally the bull bear key price level here again. Starting with this candle here, 10:10, then this 10:12 a.m. candle here. Got a nice close below, still within the acceptable range for a trade off the bull bear key price level if you didn't already take a trade back here on the PMH level. And we have the lower bands of the ribbon starting to pull away from the base here. So we have a nice bearish trade entry here. As you can see, it goes down to the 1.5 level move here. Then the 2 level move to S2, at which point at either one of those junctions, you would scale out 60 to 90% of your position. And then on the remaining runner position, you would adjust your stop to at least break even on the remaining runner. And then you could either use a trail stop using one of these two, either the upper or lower MA yellow bands of the ribbon, or just simply do a stepped stop loss as we do in our typical strategy for scaling out, just a stepped stop loss as price keeps moving down to each key level move in your favor, starting with the YDL, and then mid S2, S3, S3, and then each midpoint and key level beyond that. So as you can see here, you are going to get some retraces off of that as it stair steps down. However, if you keep your runner position, if you have enough option contracts left where you have enough where you can keep scaling out and exiting some of them at each level move down and then adjust your stop loss on the remaining balance of your runners, then you can get a nice windfall of profit as price continues down, where it did finally culminate down here and stop and reverse right at the S6 level. So we're starting to see moves in the last several days where we're getting some moves past our normal two-level extension above and below the bull bear key price level, which is what you normally see in about 80% of the sessions. So we're getting those aberrations where we're moving beyond S3 or R3 and getting more into the S3 to S6 range recently. So, but as you can see here, we did get a sharp turnaround on a dime here at the S6 level. And then you got a nice move back up where you finally had this close above the S4, and then you have the ribbon starting to separate from the base of the ribbon here. So if you wanted to take another trade off of the S4 level, then you got to move back up to mid S2, S3 here. So again, this system is comprised of the entry signal, a close above or a close below a daily main key level, either the bull bear key price level or one of the main R or S levels, or one of the 5 contextual levels. And a close above or a close below has to be confirmed by the ribbon indicator. On bullish entries, you're looking for the top bands of an all green ribbon to be starting to pull away from the base, and on a bearish entry, you're looking for confirmation with the ribbon of the lower red bands of the ribbon starting to pull away from the base. As you can see here, we have our optional filter turned on the ribbon indicator. So this ribbon indicator allows you to either work with the filter on and resets it at 9:30, which is especially important for US indexes. You can also use it with the filter off. If you had the filter off, this is what it would have looked like with the filter off. Still would have been able to get in on this reversal, it just would have gotten in a little bit later. So as you can see, having the flexibility to be able to have the filter on or off and the reset at 9:30 can be very important, especially when trading indexes such as SPX or NASDAQ NDX, or if you're trading options on other indexes such as the Russell 2000 index or the Dow Jones index, but primarily for SPX and NDX. Also with this ribbon, you can also use it in a dual screen mode. You can, if you have two monitors, you could put one monitor with the filter with the ribbon with the filter on and one with the filter off. If you just have a single monitor, then you could do a dual screen, and if you prefer, you could then only take entries when you have a close above or close below a key level and you're getting confirmation from both ribbons with the filter on and filter off. So that's really up to trader preference. I'm typically using it with the filter on. However, it is nice to be able to have that capability of being able to see it both ways, because the problem can be in a lot of sessions that you have the no filter. You can get sort of a aberrated view that's going to be a little disjointed from a serious gap up or a serious gap down. But nevertheless, with this particular ribbon indicator, you could use it in both ways, filter on, filter off, or use it simultaneously on a dual screen or a split screen on a single monitor. If you're interested in purchasing the SPX Daily Key Levels V 3.0 indicator, we have a promo code for the indicator by itself, or we have our SPX suite, which also includes the ribbon indicator. So if you're interested in either one, either the SPX suite or the SPX Daily Key Levels indicator by itself, you can simply send us an email at daytradinggps@gmail.com to request a promo code, and we'll send you a promo code for a substantial discount on lifetime access on the indicators. Thank you again for watching today's video, and we'll see you next time.